What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, January 31st. Well, Tesla fading here in the after hours relatively aggressively, making a little bit of a comeback into the end of after hours here tonight. This is, of course, because a Delaware judge today blocked Elon Musk's $55 billion compensation package. But what we're going to do here in this video is focus primarily on the psychology surrounding the charts and what we could realistically expect from a variety of scenarios here in the very near future. So this is, of course, the 1 minute chart. I think the first thing that I want to point out here is the stock is literally higher than where it opened yesterday. So I think to zoom out to even just the last 2 days is important in a situation like this. Let's take a look at the 5 minute chart here. What I think is also increasingly important is if we look at the volume. Okay, you guys know I'm a big fan of looking at volume in relation to where the stock is trading to try to get an idea of the psychology of the largest sample size available. And you can see here that the largest sample size in the last couple of days was this. Granted, it was a red candle, but the opening candle here this morning, today's obviously Tuesday, this morning, of over 4 million, almost 4.5 million shares traded in just a single 5 minute candle. And sure, it was a red candle, but I think it's important to remember that we ended up bouncing up out of that hole. And after all of that massive volume, the volume never really died off. I mean, it was still the open. Right, and the stock rebounded from there still on reasonable volume. So even though we saw the biggest volume on a red candle, when you collectively take all of that volume, the stock still made an intraday high test of 196.36, telling me that the biggest sample size of the day agreed that the stock belonged somewhere between 192 and 196.36, right? Now, you guys will very commonly hear me say that with after-hours moves, regardless of news, regardless of earnings, we have to take them with a grain of salt, because if you look at the actual volume of the move, the volume is incredibly low. I mean, this move is occurring based on a very small sample size. So whether the stock was up, 8% after hours or down a few percent after hours, always take after hours movement, and pre-market for that matter, with a grain of salt, unless the volume is to a ridiculous degree that is uncommon for pre-market or after hours, where we can start to consider it as a realistic sample size. In this case, this movement doesn't even come close to comparing to regular hours volume. So I'm more interested in seeing where this thing trades off the open tomorrow to start getting a much better idea of where a larger sample size of volume thinks this stock currently belongs, with the new, what is being perceived as potential risks or uncertainties that come along with the court decision today. So let's move on here to the 30 minute chart and get better context surrounding the highly popular technical indicators, right? The psychological self-fulfilling prophecies, as I like to call them. You can see the 50 period here today was actually acting as an area of reasonable support into after hours. So the move below there happened on lower volume in the after hours. And we actually first, at least recently, claimed that 50 period here on the 30 minute chart as a support off of Monday's open, yesterday's open. So here on the 30 minute chart, again, just one factor in a variety of time frames that I'm always looking at. I'm going to be paying attention to that 50 period. If we do end up seeing an upside test of that, ideally, if you're a bull, you'd want to see that get reclaimed, potentially back tested, formed as support, and then a bounce up out of that hole to come take a test of this 200 period. If you are bearish and we end up seeing a test of that 50 period right around 191, at least that's where it currently stands, you would ideally, of course, be looking for a hard rejection and fade off of that level. That would more so support your thesis here in the very short term. But as always, consider it one factor on a variety, looking at all the time frames, not just the ones that confirm or go against your bias, right? Now, here on the 4-hour chart, you guys remember we've been talking about this 177.50 to 180 level for at least a few days now. This is a highly important range on Tesla currently. Now, the stock currently sitting at around 186.70 here in the after hours. So this 4-hour chart becomes increasingly important here. And I'm going to be paying very close attention to this. Of course, this level down here, this range, 177.50 to 180, is, of course, relevant on all time frames. But what this does here is it forms a channel that is really only shown on the 4-hour, and the 4-hour is a highly watched time frame. So I know a lot of institutions are seeing the same thing. See this 50 period on the 4-hour? It's coming down toward that incredibly powerful psychological level of $200 a share. And this region here, okay, this kind of double up, if we continue to see that fade downside, is forming the top end of this channel between 200 and 177.50 to 180. Remember, that area of potential support is a range, not an exact dollar or penny. So I really think here on the 4-hour, it's kind of a race to either side. Obviously, if you're bullish, you want to see an upside test of 200 here as soon as possible. But even more importantly, a break upside, back test and hold. If you're bearish, you'd want to see that fade. If you're bullish and we end up seeing a downside test, you want to see a bounce up out of that hole, holding 177.50 to 180 from a macro perspective, right? It doesn't have to be perfect, just as long as it holds it over the course of a couple of days. And of course, if you're bearish, you want to see a big downside break. Ideally retest and then fade off of that, claiming that as a newer level of resistance. So let's look at probably the most important chart out of all of these. Before we do, hey, if you're getting value out of these videos, please subscribe to the channel. I greatly appreciate it. It helps out tremendously. Now listen, this is the daily chart, okay? So the after hours movement is not going to be reflected. Remember, the stock's currently somewhere down here, okay? Now, all the levels are the same, but what I wanted to show you is the 200-day and the 50-day. Right, these are the two most popular indicators on the most popular chart in the entire market on one of the most popular stocks in the entire market. So these two up here are areas to watch, but here on the daily chart, of course, not really immediately relevant, and that's okay. Just keep an eye out for those here in the future as they come down or the stock moves upside. Now, what I really want to show you guys here on the daily, take a look at implied volatility. You know, if you own options, like you bought options, you always want to see IV moving upside because that benefits you whether you're red or green on the position as long as you bought them. The keyword being you bought them. If you sold options, like you sold to open some calls, like covered calls, or you sold some cash secured puts, or you're short a particular option spread strategy, in that case, you want to see IV come down, right? Because that would benefit you again, whether you're green or red on the position. I know it's semi-confusing, but once you start to understand the Greeks, this is Vega, okay? A highly important Greek, in my opinion, one of the by far most important and oftentimes overlooked. This is where IV crush and IV pump comes from. And implied volatility currently making a move to the downside, and if it continues to come downside, and you can see here, compared to the recent past, it's actually now in the lower range. That opens up some potential opportunity for buying options for a potential return to equilibrium in implied volatility, which would, especially if you're correct directionally, benefit you as an options buyer. And even if you're wrong directionally, it would soften the blow a little bit. It of course does not take risk off the table. Delta almost always wins. But don't overlook Vega. It's highly important, and I think a necessity to understand Vega to make money with options consistently. Now, let's finish up here by taking a look at the options chain, see what the options traders were thinking heading into the close here today. Great sample size here today. Lots of good data here. 2.04 million total contracts, 1.155 million calls, and 889 approximately thousand puts. Okay, so we are seeing the overall call put ratio leaning to the bullish side, but that short-term speculation, that 0 to 20 delta, right? So what are the short-term speculators thinking heading into tomorrow? And remember here, I want to be very clear, this is data, okay? They could, of course, be wrong, but we are seeing just barely leaning to the bullish side, about 418,000 calls, 407,000 puts. I almost want to call that evenly matched. That is a very, very slight bullish lean. But this is all worth paying attention to, of course. Guys, if you wouldn't mind, before you're out of here, leave a comment. Let me know what stocks you'd like to see covered here on the channel in the future, even if it is just Tesla stock. And I'll see you in the next one.